Good afternoon, everyone. I'm Greg Olma with Key Performance Ideas, and I would like to welcome you to our webinar, Strategic Modeling in the Enterprise Planning and Budgeting Cloud Service. Today's webinar will be presented by Scott Costello. Scott Costello is the Director of EPM Cloud for Key Performance Ideas and is a CPA, and also a certified Oracle Hyperion Planning, Essbase, and Hyperion Financial Management Consultant. He has more than 18 years of consulting experience and has guided customers across a variety of industries in their implementations of successful planning, forecasting, close, and reporting solutions. Scott, welcome and thank you for joining us today.
Thanks, Greg, and thanks everybody for joining. Just a quick review of what I'm going to be presenting today. I'm really going to talk about and demonstrate the new strategic modeling capabilities that's available in Oracle's Enterprise Planning and Budgeting Cloud Service, and how this tool now completes and integrates with the entire enterprise planning operational plans. So I'm going to start just by talking about what do we mean when we say strategic modeling, a little bit of the history there. Talk about how this is moving to the cloud, and then I'll give you a quick demonstration of the solution. So just to define strategic modeling. So the tool I'm going to show you today has a very interesting and long history. The tool was actually developed by two professors from Northwestern University Kellogg School of Management, Al Rappaport and Carl Noble Jr. These are both well-known individuals in this space. Al Rappaport even authored something called Creating Shareholder Value. It was instrumental in really the advent idea of value-based management. So they created a company, Al and Carl, and they called it Alcar. Then in 2003, the organization known as Alcar was acquired by Hyperion, and it was rebranded Hyperion Strategic Finance, or HSF. Now, that tool has seen a lot of popularity. Well over 1,000 clients worldwide are using this on-premise solution called Hyperion Strategic Finance. Now, the solution actually started to fall into the rest of the Hyperion and Oracle EPM suite in 2013 when it was introduced and worked with SmartView. SmartView is an add-in into the Microsoft Office suite that works against the entire EPN or Hyperion technology. But just recently this year, they moved it into the cloud environment. Oracle moved into the cloud environment as a part of Enterprise Planning and Budgeting Cloud Service. So that's a little bit of the history. Some folks on the phone might be familiar with Hyperion Strategic Finance. If you're going to see something new for the first time, for those of you that are familiar with it, you'll see something that looks very familiar, but in a much different format. So let me just talk about the concept of strategic modeling. So when we talk about strategic modeling, we're talking about how does the organization set its strategy. Right? What's your strategy for the next year, 3 years, 4 years, 5 years? What is the long-term plan? Most organizations who do this type of modeling, they use it for that long-term plan. So planning for that 3, 5, 10 year out, look at the business. And when you plan for things like that, a lot of things have to be considered. So things like corporate initiative. Am I going to invest in a certain product or divest on a product? Am I going to have some M&A activity? What's Treasury going to do in terms of debt and cash? These are all things that are looked at by the Office of the CFO and are looked at in more of a long-term perspective. And in conjunction with that, we have what we're all know as more bottoms-up plan, more operational plan. I got to get my budget done for this year. I got to get my forecast done for this quarter. Right? So that includes a whole bunch of different things as well. And a much more granular level, much more a broader group of folks who do things around planning for the workforce, planning for revenue, planning for cost, capital items, project planning. The bridge and the gap that we see with a lot of organizations is trying to meet in between. And that's what this technology does. It bridges that gap of taking those long-term plans, the strategic plans of that organization and marrying it up with the operational plan. Because if you really think about this, how can you as an organization set a strategy for that organization if everyone who's doing the budget, who's doing the forecast, doesn't have insight into what that strategy is? You need to know what are the revenue plans, what are the revenue targets. You need to know from the bottoms up what are we going to plan for, and is that in line with the strategic model? These two different processes, while critical and done at every organization, are seldom met in between. And that's what this tool is meant to do. It marries a small group of users thinking about the complete financials from a long-term perspective with the operational plans of lots of users focused on just things maybe more around the P&L. Now, the solution out of the box is a lot of different things, and this is kind of a laundry list of just some of them, but I'm going to be getting into a presentation here in just a second. So, again, the most popular way this is used is for modeling out multiple years. Again, not just thinking about the current year, not just thinking about the next year, but thinking 3, 4, 5 years out. Being able to set goals and targets and what drivers you can play with in order to reach those goals. Being able to do sensitivity analysis to see the impacts on changes as you go years out. Now, every business is dependent on certain things, whether it's inflation, whether it's the cost of materials, cost of goods, whether it's commodities, whether it's things like healthcare, and the expenses associated with people around healthcare. We have a lot of different external factors that drive our business. And so we have to be able to plan for those things appropriately. We have to be thinking years and years out. So a lot of the things that this can do in terms of optimizing some of the capital structures, help you plan your debt-to-equity ratio. Public organizations can help, with things like issuing or buyback stocks, driving your earnings per share, dividend payouts, all that good stuff. Private organizations also have these challenges, right, and may have to repay or borrow debt. May be concerned about acquisitions. They'll have to set a target valuation of what they want their organization to be in case they're going to be acquired someday. So this really applies to every organization, big and small, who's thinking about the business more strategically, more long-term. So when you marry this technology with what we've seen in the cloud lately, it really goes together well. Just in the past 3 years, since some of the Hyperion suite has been available in the cloud, since Oracle EPM has been available in the cloud, we've seen a lot of successes. We've seen organizations, whether it's financial services, whether it's manufacturing, higher ed, distribution organizations, you name it. And we've seen people moving in this direction, moving towards the cloud. And when we asked our clients, what was the driving force to making you move to the cloud, these were some of the responses we got. Right? Requires no IT involvement. The backups, patches, upgrades are all done automatically. You don't have to go out and buy new hardware to host any of this. And as your organization grows, you don't have to continue to invest in that hardware. Usually a quick ROI on this because the implementations are pretty quick. We generally speak in terms of weeks as opposed to months. And a lot of times people are just using outdated or unsupported. More often than not, what we see people using is Excel, even for a long-term plan. Even if setting a strategy of an organization, they're using Excel to help them with it. And a lot of folks just know that Hyperion name. It's been around for, since the 80s and is really focused on doing things around budgeting, reporting, analytics. It's a trusted name out there. It's a leader in this space. But complement that with the economic impacts of the cloud, the never pay maintenance fees again. If you are an existing Hyperion Strategic Finance user, the cost for that client server-based tool was pretty significant. So the maintenance, was pretty significant as well. But going forward with the cloud to never have to pay for an upgrade again. So eliminate servers or recommission them. To be able to expense some of the subscription versus capitalize some of the costs. And as mentioned, the implementations usually go pretty quick because we don't have to worry about all that hardware and software to install application and running. So that's a little history on this technology that you're going to see. And I mentioned there is an on-premise version of this that is now in the cloud, and that's what I'm going to demonstrate here. All right, for those of you unfamiliar with the Oracle EPM Cloud Suite, this is what it looks like. For existing Hyperion clients, existing Hyperion strategic finance organizations, there's quite a different look and feel to it. So everything is now kind of big button based. Everything looks and feels like we act on our iPhones or mobile devices. All you need to do is click on a button. Even the browsers themselves are supported from Google to Firefox to Chrome to Safari. So you can access all of this directly on your mobile device too. What's nice is as I log in, I can customize these screens. I can customize pictures. I could put tasks and announcements, anything like that, that I might want to interact with. And even once I'm logged in, have some quick capabilities. So if I wanted to download something like SmartView, if I want to reach out to Oracle for support, or what's even nice as an end user, I can provide feedback directly to Oracle's R&D department. So if there's something I'd like to see different or change, I have direct access to that team. So anytime I provide feedback, it goes directly to them. But the module we're going to be talking about is within the financials module. So you'll see at the top here, I have financials, and I have a few other modules to the right. I have projects, I have capital, I have workforce. So I talk a little bit about the marrying of your strategic plan with your operational plan. And those other modules focus a little bit more on operational stuff, things that everyone does, workforce planning, HR planning, people planning, being able to plan for capital assets, tangibles, intangibles, and doing things more like projects, whether that's a huge construction or just, an software implementation. All those can be planned with this tool more from the operational side. On the financial side, though, is where we think more strategic planning. How's the P&L and the balance sheet and the cash flow going to look? So if I click on the financials, I'll see some of the components of my financial reporting tool, right? The revenue, expenses of the P&L, the balance sheet, cash flow, and be able to do some analytics off any one of those. If I click on just the revenue piece here, that pink button, I'm immediately presented with some of the out-of-the-box dashboarding that's available in Enterprise Planning and Budgeting Cloud Service, or EPBCS. So whether it's revenue, income statement, rolling forecast, being able to play with things around, not just revenue, but my cost and my gross profit, being able to see things immediately, like my forecast for the year-over-year growth, be able to analyze things like my cost of sale, my total revenue, my product mix, by just category, or even the trend of my revenue quarter-over-quarter. Again, these are just things out of the box with the application. Each one of these dashboards is customizable. It's drillable. So if I click on the cost of sales one, I could see here's my cost, broken down for last year's forecast compared to this year's plan, and then I can drill into any one of these too. So if you have more detail behind it, all the dashboards are now interactive. The strategic modeling is over on the left-hand side here, and you'll see this kind of laid out very specific for you. In this example, what you're looking at is a strategic model for the U.S. You can have different models for different entities within the organization. You can have it at a consolidated level. You can plan for different ownership, minority interests in different organizations, and keep that all consolidated so you're getting a complete picture. I can also see that everything I'm looking at down rows is all my accounts. It's my entire chart of accounts, and I'm looking at that all the way out for 2020. And this is what I'm going to be planning to do. So I don't want to necessarily look at all my assets on my balance sheet information or cash flow information right now, so I can focus this to be just on certain operating accounts, the things around sales, things around costs, and maybe some strategic expense accounts, and play just with those. So right now I have highlighted one of the revenue accounts, my product sales. I also have service revenue, maintenance revenue, and I have costs associated with all of that as well. So if I'm an organization who sells products, and it doesn't obviously just have to be products, I can go ahead and look directly and see how am I predicting my product sales? How is my account for product sales being forecasted by clicking on the action button and viewing the account forecast. So in very plain, simple English here, and this is using some of the naming conventions of the application, the B300 represents my unit volume, you can see down here, times my ASP, times my asking price. So price times volume. Pretty straightforward to determine your product sales. You can edit these formulas, but it has much more of an Excel feel to it, right, where I'm just multiplying things times each other or doing more complicated math. This gets you out of that Excel challenge, though, right? The auditability, the security, the scalability of Excel, and most importantly, the linking of this strategic plan, my long-term plan, to my operational budget. So you have complete visibility to how all these accounts are calculated, and you can tweak how any of those work or how they're calculated as well. Click back on my product sales, and I want to investigate, let's say this number, this one, and this is in millions. $861 million is what I expect in my product sales for the year 2020. If I highlight just that number, and then I go over to my actions button, and I want to see, well, how did we come up with $861 million? There's an audit trail built into the solution that explains, going all the way back to the current year, how this value is calculated. So I can do this on any cell in the application, and I can see exactly how things are calculated. So in this example, my 2020 number of $861 million is, again, taking my unit volume times my product price, or anticipated product price. So $45 times this $19 million gets me that $861 million. If I want to investigate any one of these numbers, like where did that unit volume number come up, or do I get that $19 million in unit volume, I can click on that. And it's going to show me, well, that's based on 2019 unit volume of 18 million, and then we added a 4% growth rate. Now I can change that growth rate. I can play with those assumptions again, but all my numbers are drillable. So not only do I have insight into the values themselves, but the logic associated with them is very transparent. So when we talk about Audit Trail, I can really see and audit any one of these numbers, and I can keep investigating to see the math, to see how things were derived, and then play with those numbers as needed. I'm going to click on this number again, this $861 million. One of the key things for any organization who's doing strategic planning is to really think about the different scenarios out there. I mentioned before that every business I've ever worked with has some dependency on external factors, whether that's exchange rate, interest rate, inflation, commodity costs, cost of raw material, cost of labor, people expenses. And any one of those can fluctuate. So I worked for a while with a mining organization, and they base their business a lot on the price of gold. That would determine a lot of revenue for them. So they had over 30 different scenarios that they needed to plan for, just in case the price of gold fluctuated. And it could fluctuate in a variety of different ways, up, down, curve, spike, you name it. And that's what you really need to do in order to strategically plan properly. I'm not saying 30 is the right number necessarily, but you need to be able to have multiple scenarios that you play with as business, so that you can be much more proactive when things do change instead of reactive. Right, so let's start with a base scenario, what we're planning the next 5 years to be. But let's have an upside. Let's have a downside. Let's assume we're going to add some capital. What impact's that going to have? Let's assume we raise prices. What kind of impact's that going to have? Or we expand the business. And I'll get into that here in just a second. What's great about this tool is how easy it is to create multiple scenarios and then apply the appropriate one as the targets for your operational plan. So again, if I go back to this and I choose my expansion, or leave it on, I'm going to leave it on base actually, and I'm going to create a new scenario here. It's this easy. So I can see all my scenarios listed. I can edit any one of those scenarios, and if I want to create a new scenario, I just click a button. And because I started on base, it's going to copy that base and even tell me that it's copying the base scenario right from the get-go. So I started with a different scenario, and I created a new one. It's going to copy that one. So if I change this one to, let's say, what if, we call it a what if scenario, I then have the option of choosing, how do I want to play with this particular scenario? Maybe I want to add very specific accounts to it, around the P&L. Maybe I want to eliminate certain accounts and just have the other accounts act as they should. So I can click on the Add button. I can select all the accounts that are in the application and pick and choose which one I want to focus on for this particular scenario. So instead of worrying about the whole P&L and everything, the balance sheet and cash flow, you can pick and choose which accounts you want activated and which accounts you want to use for that scenario. And when you click Save, I can then see that new scenario and all the accounts have been added to it from my base scenario. So now I can start making some assumption changes. It's that easy. It's a couple clicks of a button to copy an entire scenario, but not just the scenario itself, all the logic that drives that scenario. And when I talk about logic, the only thing I've shown so far is, revenue or units times price. But I know when I make a unit change and I adjust my revenue, that has a big impact. That's going to impact my production. That's going to impact my cost of goods sold. That's going to impact my equity. It's going to impact my gross profit. I might have to hire more people. It's going to drive my balance sheet equity. I might have to borrow a little bit more to do that. All those linkages that you might have in Excel today or try to do, things that usually are a circular reference, all that goes away with this solution. So let me give you another example here. If I use my expansion scenario, and let's say I want to change my product sales. $861 million is good, but if I'm going to expand the business, I expect to achieve much higher than that. Maybe I'm going to invest in some capital here. Maybe I'm going to play with some of the other variables to do that. So I'm going to seek a goal for my organization in 2020. And instead of it being $861 million, I want to get to $1.1 billion in revenue, in product sales. Sales is made up of not just products, but services, maintenance, and then obviously taking into account some of the discounts and returns. How do I achieve this $1.1 billion? Well, that's where I get to pick and choose. Right? Again, if you try to do this in Excel and you say, oh, I want to fluctuate capital, or I want to maybe raise prices or maybe change costs, you're playing with lots of different variables, and that's where sometimes we'll see circular references occur. It's not that easy. You're changing formulas, you're changing values. Here, I can actually pick and choose, again, the accounts that I might want to change. So I can select the account instead of it being just my revenue. I want to select a specific account. And by selecting the select account or start period and end period, I can adjust all those too. So here I'm going to say, for this example, let's just drive the change based on unit volume. So I'll do something real simple here. But, what's great with this tool is I could pick anything. I could say, you know what, I want to actually seek a earnings per share for my company of this, or I want to seek a target valuation of X. In this year, and then play with the other variables that would drive that. So in this example, again, I'll just say unit volume. I'm going to pick my start period, my end period, and adjust that. I can do it by a certain percentage or the same amount year over year. When I click Seek, it's going to go do the math for me. So real quickly, you'll notice the yellow values that have been updated. Yellow shows that these accounts have been impacted by it. So I haven't touched my service revenue or maintenance revenue necessarily, but I did change my product sales. So in order to achieve that $1.1 billion in product sales, this is what I need to do to grow the business year over year. By 2017, I have to be much higher. I have to be closer to 727 in product sales or 770 in total. In order to, it has to keep going up by that same percentage is where we adjusted it. So keep in mind, just because I have an update in sales, I also have updates in things like discounts and returns, as you see down below. I'll have an impact in my unit volume, obviously, as you can see below, and see some of the results before you apply them, before you save them. So, again, what's really neat is being able to adjust any account and seek other accounts, but keep the logic that's built into the application, that's out of the box with the application. Keep the logic that links this sales number all the way down to the equity of your balance sheet for the years out. That has an impact on your cash flow. All those financials are kept, and the logic associated with them are just built into the application. Now, obviously, again, you can change some of the naming conventions and things like that, but this goal seeking is a solution like none other. So the fact, again, that it's embedded within the big picture, the long-term enterprise planning, really adds the value. Now, I don't be showing everything with this technology. There's some capabilities around debt scheduling, playing more with some treasury functions, tax. But I just wanted to give everyone kind of a flavor of today. What's really important, I think, in terms of these expansion or in terms of the scenario planning is once you're happy with things, not only do you have the ability to kind of tweak numbers and play with it, but built out of the box is a comparison. So as soon as I save this and I go to my scenario comparison, I can see those differences. So I can see if I want to hit that $1.1 billion in 2020, then my strategic plan for 2017 needs to be this. Or if I wanted to go down the capital addition route, this is what I need to achieve in sales in order to get there. I want to bump up my pricing strategy. I have an upside or a downside. Maybe I have that in 2017. Maybe I wait till 2018, 2019. But this becomes the target that I can then apply for the operational plan. Now my sales team knows what number I'm driving towards, and I've set my targets for the year. If I really want to get to $1.1 billion, I got to get my sales team for the expansion to get closer to $770 million in whatever investments I need to make to get there. So that's a quick run-through of the technology. Again, there's a lot of other pieces to it, but I really want people to, if you have one takeaway here, the idea of being able to do these long-term strategic plans, doing multiple scenario planning for your business, and connect that directly with your operational plan for your targets, and then feed your operational plan for the coming year. That integration back and forth is key, and that's what this enterprise planning budgeting cloud service does. So it's thinking about budgeting of not just one process, but it really thinks about the entire enterprise, both long and short term. That's the end of my demonstration. I do thank you all for taking the time here today. If you do have specific questions on things, feel free to email me or Greg. But I'm going to turn it back over to Greg here to wrap up today's presentation.
Thank you, Scott. And thank you for joining us today for the webinar Strategic Modeling in Enterprise Planning and Budgeting Cloud Service. If you have any questions, please don't hesitate to contact us. Scott's and my contact information are on display on your screen. Thank you again for joining us, and have a great day.